Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. The headache is coming back again here. There are still two core patterns here currently in operation. I've highlighted the relevant trend lines in blue to help visualize what is going on. We have a possible September to date ascending triangle, currently 98.13 to 99.58, and a possible September to date bull channel, currently 98.13 to 101.51. The bull channel could actually be a rising wedge pattern instead, but that is not really the point just yet here. The real issue is both patterns have had false breaks within the last 2 weeks. There was a false break above the upper trend line of the ascending triangle 2 weeks ago. That turned into a pipe top and a false break below the lower trend line for both late last week. That turned back up last Friday and ended up closing on the upper trend line of the ascending triangle of all places. This was followed through higher this week, seemingly stalling once again at the very next resistance, the declining medium moving average, currently at 10025. Now you can see why this market has been giving me a headache. Both patterns have been compromised, both repaired themselves, and we're now seemingly breaking again one of the patterns, the ascending triangle, though we are still sitting here waiting and wondering which pattern will dominate. It is at this point that I started wondering if both these patterns are correct at the same time. Schrodinger's cat, for those who know the analogy. Yesterday was a reactionary bearish engulfing pattern, if only just, and a close back below the medium moving average. However, it was also a third consecutive close over the upper trend line of the ascending triangle. Thus, we still have the targets overhead for this pattern. A primary target X would be in the 102.65 area, and a secondary target X1 would be in the 103.65 area. Looking at the bigger picture, part of me still hasn't been fully released from the idea that the lower tine, currently 97.81 of the big old broken January to May 2021 bearish Andrews pitchfork, as well as the middle tine above, currently 101.51, may still be influencing this market. So far today, well, not that much. A move up over the medium moving average, but price have since dipped back down through yesterday's low and back towards the top of the ascending triangle. Cable, aka sterling against the US dollar. A second market has been giving me a headache. Much as in euro-dollar, there are two core patterns here, currently in operation. I've highlighted the relevant trend lines in blue to help visualize what is going on. We have a possible late September to date ascending triangle, currently at 113.25 to 115.05, which is rapidly running out of maneuvering room, and also a possible September to date ascending wedge pattern, currently 113.25 to 117.49. The issue here, as in euro-dollar, is that both patterns have had false breaks within the last 2 weeks. A false break above the upper trend line of the ascending triangle 2 weeks ago failed at the upper trend line of the ascending wedge pattern and just short of the declining medium moving average, and that's currently at 116.54. Meanwhile, late last week we had a contrary false break below the lower trend line for both patterns that turned back up last Friday and ended up closing right on the declining short medium moving average, currently 113.45. So, both patterns have been compromised and both have repaired themselves. And then this week we've had a breach of one of them again, though we only had the one close over the flat trend line 2 days ago. Now you can see why I've been given such a headache here. I also, much like euro-dollar, started wondering if both these patterns are correct at the same time. Schrodinger's cat again, for those who know the analogy. Anyway, I've decided to keep for the moment, even though we are back within the ascending triangle, to keep the primary target X for this pattern in the 120.20 area and the secondary target X1 in the 122.5 area. It now depends on what the market does with the short medium moving average. So far today, well, a small reactionary move back up based on the close yesterday, which was right on the short medium moving average, but not even managing to move up over the March 2020 low at, well, just over the March 2020 low at 104.02, but then back down again. Euro sterling. A second bullish white soldier yesterday and a follow-on higher to the previous session's immediate countering bullish harami. Once again, prices utilise the rising short-medium moving average, currently at 87.15, as a base for the move upwards, this time moving and closing over the recent congestion from early October between about 87.69 to 87.80, but halting ahead of testing the 50% Fibonacci line of the March 20 to March 2022 move at 88.51. Below, in addition to the short-medium moving average, we have the April 2021 low at 87.19, the April 2020 low at 86.69, and also the breached but possibly repaired lower time, currently 86.72 of the bullish April to August Andrews pitchfork. So far today, a reactionary move back down, setting up for today being a possible bearish dark cloud cover pattern. US dollar against the Indian rupee. An indecisive doji cross yesterday as the market based itself for a second session on the rising short-medium moving average, currently 81.27, as well as the further support a little lower from the recent 50% Fibonacci line at 81.13. I now need to discuss the larger scenario which I had previously mentioned. I had previously highlighted how we have a September to early November ascending expanding wedge pattern. Late last week, prices had pushed down through the lower trend line, currently at 83.19. And the move lower since then has confirmed the pattern. Hence we have a primary target X in the 1890 zone and a secondary harder to reach target X1 in the 8028 zone. These might be all well and good, but as I said only 2 days ago, and I quote, we start running into things, notably the rising short-medium moving average and perhaps more importantly the recent 50% Fibonacci line at 81.13, end of quote. Well, these two have halted the decline yesterday and even over the past 2 days for this market to have a possible 3-day bullish morning doji star pattern. Today is the third day, so we'll be watching closely to see if this possible pattern construction holds water. Well, so far today, well, an attempt higher, which would fall in line with this being the third day, but is early yet. The top side has been capped at the moment by the late October low at 81.90. We have congestion further up at 82.13 to 82.18, 82.26 then, and 82.70 area. US dollar against the Brazilian real. A bullish engulfing pattern yesterday, which wasn't that hard, as the previous session was an indecisive spinning top. However, it was a limited move higher as the base of the move was on the slowly declining middle time, currently 514.45 of the July to end of September bearish shift pitchfork. And the cap was the very next resistance area above at the lesser Fibonacci line at 520.27. Above this Fibonacci line we have the 3 out of 4 moving averages, plus the 50% Fibonacci line of the May 2021 to April 22 move at 522.76. All the action this week still puts a question mark on last week's weekly key reversal down. US dollar against the Mexican peso. A second bullish white soldier yesterday and a suitable follow-on higher to the previous session's bullish harami and almost bullish double. The market closed over the 2021 low at 1953.63, but did not try and test the further overhead upper time, currently at 1966.10 of the broken March to July bearish Andrews pitchfork, and some distance now under the middle time, currently at 1977.24 of the still intact bearish shift pitchfork for the same move. We also have the April 2022 low at 1971.68 in between. We actually finished the session by closing right within the June-based congestion area between 1955.65 to 1958 even. Now, so far today, a small reactionary dip to the 2021 low before a pullback up and looking like an indecisive doji cross right now. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Tofpik and ADM Investor Services International Limited. And here comes the final bit.